All right, so most people are trying to exit before it's too late. On top of that, everyone is looking for answers. They're demanding answers because it is just natural, right? Like us human, we are in a relationship, and if something goes south or if something goes in a different directions, we are demanding answers. Like we want to know what is actually happening. But in this case, when we're talking to developers and builders and the entire real estate situation and graphs and math that doesn't actually work anymore, things suddenly shift because the answers are not really coming, right? Like it's policies that are being kind of drafted, and you have to kind of move in the new segment or era or the new structure that has been made, right? So it is a little bit different, right? And people are starting to actually catch on it. They're realizing that they're sinking, especially in the condo market and whatnot, but also in the actual detached segment, like their family homes and whatnot. Like people are realizing, hey, look, maybe I will not be able to afford my mortgage payments, or I will not be able to afford my next vacation, and how does my actually business look like, right? There are numerous strategies, right? But people are like, okay, we will reduce the price to attract who, right? I mean, it is just what it is, like, right? Like you're depleting your profits and whatnot, right? So construction is down, like there are no startups, right? And people say, hey, look, no startups equals to a real estate boom. Yeah, technically. However, if construction people are not making money, if automotive is not making money, if manufacturing is stalling, if realtors and mortgage brokers and everybody else in that segment is not making money, so nobody's trading, who will buy these properties, right? So it is definitely like a bottleneck situation. But let's get into the video by talking about the interest cost reality check, right? And if you have seen on the thumbnail, right, like somebody on Reddit posted it, right? Like we had to renew our mortgage, that the 5-year fix was over, so they renewed it. And what happened, the mortgage payment almost doubled, right? So that actual person had to sell their family car and whatnot, and just to stay afloat or stay above water. But even that is not a solution, right? So I don't know what they do, but I mean, you need a vehicle if you live in Canada, right? So monthly payments are up by between 40 and 70% on average, higher than the pandemic level, which is for sure. Refinancing doesn't save you, it resets the pain, and that ongoing pain we have seen, bankers and suggestions and everybody else in that industry was saying, hey, look, a few years ago it is a bit high on the higher end, but why don't you just lock yourself in for a year, and then we will assess the situation in a year and then think about it, right? But all it happened at that point, it was just a band-aid fix for the time being, and now we're again stuck in a bigger issue or a bigger problem, right? Cash flow stress is real, even for dual income families. That is 100% true. I've spoke to many families in different categories and sectors, blue collar, white collar, you name it, and everybody feels that pressure, whether it's for security pressure, like them, leaving the job or being fired, or it's just financial pressure, or overall how they will kind of make that next 5 years. Like it's a huge concern, and I think just mentally everybody has that 2030 set in their head for whatever reason. Maybe it's just like a psychological thing, like it's a round number, 2030 or something like that, or something bigger is happening, and then subconsciously we're getting to this 2030 number. Equity illusion. Paper wealth is melting while property taxes and insurance keep climbing. Yes, like we have seen that, and it is very noticeable, like Florida and stuff like that. Like people called me and they said like my insurance went through the roof because of different natural disasters or whatever the case is. But it's just nuts, right? Like even here in Canada, you know, every insurance that you have, the premiums went up, whether for a good or bad reason, but it's just like it's costing you more to have insurance. Many owners still look rich on paper but can't access liquidity. Yes, so when it comes to that, like outside everybody looks fine. Most people don't want to share or say their true problems or their true pain points, which is fine. It's a personal I guess property, right? but I do feel that there are more concerns and more of these death pileups everywhere for a lot of people. So I don't know how to kind of get into this segment, but I just realized more and more talking to more people, at least here in Canada, that more and more people are getting into more debt just to stay afloat for their everyday, you know, tasks, right? Like paying bills and live, and that's it, right? So people can't sell because they owe too much, can't rent because rent doesn't cover the cost. Yeah, so like everybody's upside down. Like I guess that's the right terminology. Yeah, there are some people, there are some Canadians out there, obviously, that, you know, are debt free. They paid off their homes. Good for you, right? But there are many people, they're upside down, especially if they tapped into some investments or if they went into some hardcore renovations. A lot of that was happening, right? Like we all know that. So these problems are not just going to go away. Like if you owe the money has to be returned with interest on top of that, right? Like there's that segment that's not going to go away, right? Like that headache will stick there. So many unfortunately just believe because in their home everything is brand new and everything is fine, that the market will value it even more. Yes and no. Like I think those days are gone and those days are maybe even over, right? But it doesn't mean that if it's renovated that it sells faster, right? Everything has a price, right? So that's just something to think about, like, and depending on the situation you're in, right? So institutional pullback, lenders are tightening quietly, less appetite for risk, stricter renewals and lower appraisals. Yeah, so I talked about that. Like most of us, like, you know, being in a relationship or having a relationship is just natural and common sense to get a explanation. Like we demand or we seek that explanation. But a bank is in a relationship with you, right? But doesn't have to explain anything, right? Like these are the new rules, and that's it. That's the relationship. Like it's finished. Like at the end of the day, it doesn't matter if you owe $1 million or if you owe $1, the bank still owns your property or home. So it's just something that you sign on that dotted line whenever you get into relationships like that, right? So banks now want proof of long-term income stability, not just asset value. Yes, so the bank is also playing the game or playing a part in this big scenario, right? Like, so they don't want to be later liable for you or for their sake. They're assessing their risk and they don't care, basically, right? If they feel that it's not right and if it's not correct in their eyes, they will just not approve it. And it's happening already, right? People having a hard time, especially those people that now, once again, in their renewals, they have to approved through Canada Revenue Agency or CRA with additional documents, right? So it's just like putting more walls, higher fences around their investment, because if you in a partnership with the bank and you took a loan, it's basically their property that they're taking care of, even though you're just for the meantime paying for it, right? So that's what it is, right? So it's just something that you have to realize, right? Like, I mean, you just have to realize that you have to play this game, right? And if you cannot prove the CRA document down the road, like, they will not approve you. You think they care? They don't care, right? This squeezes small investors and middle class owners the most. Yeah, we have seen a huge a hockey stick phenomena during the pandemic, and even before the pandemic, of the middle class, especially trying to get into that heavy entrepreneurial, we know it all, we're gonna be flipping homes, we will build, we will thrive, we will make our millions and gazillions or whatever, right? But it's like all of that, most of that has been built on loans. So at the end of the day, if you don't have enough equity to build it, you're gonna go under. Like, it's very simple, especially if the market is shifting or already shifted, right? And we are seeing like big companies, Van Dyke, like, you know, 1.3 or 1.5 billion dollars in Mimico right here in Etobicoke went under. Who would have thought? Like who would have thought that? Like, I mean, it is not even, it wasn't even in a corner of my mind that a company with the pedigree, with a nice logo, with all the mechanics behind it, could go under just like that. Like, they went under overnight, right? And nobody's even talking about that. And that parcel of land is still sitting there. So if the times were somewhat great or phenomenal, so you don't think other people would jump on it and start building and grab that opportunity or whatever? Absolutely they would, but maybe it's not the right time. I don't know. Like, you know, things are shifting very quickly. So psychology shift. 2021 optimism replaces 2025 fatigue. Yes, it does, but I think 2026, which is exactly 5 years from 2021, which, you know, will trigger more of these renewals, right? Because, you know, some people took 1 year agreements with the bank, some 3, but most took 5 years. So we will have these mortgage renewal folks, Canadians, that go from the little 1s and 2s to, you know, 4, 5s and 6s, right? So we could see mortgages go from, you know, $2,000, $2,500 a month to neighborhoods or $4,000 or $5,000 a month. But at that point, it shifts that middle class altogether, like complete shift, because like people do not have these kinds of buffers, period. They just don't have it, right? Where this leads, liquidity collapse, when too many try to exit at once. The crash isn't sudden, it's slow erosion, and it happens quickly when everybody gets to the table at the same time, right? So yes, usually crashes do happen in this style, or in this way, right? Like, everybody is trying to fight, trying to hope, trying to analyze, and some people, like, I'll be honest with you, like, some people had it down, like, you know what I mean? Like, they bought this and that, and they had these graphs, and it looked fine, and it would look good if everything was okay, or if everything continued the way they imagined, I guess, at the time. But it doesn't play out like that. Like it played out completely different, right? So now, like, the entire domino effect, and it started with a small little domino, they didn't exit, it hit the bigger domino, and it keeps on going. And eventually some of these people are gonna go under so fast, they're not even gonna realize it, right? And we know it in the stock market because it happens much faster than in real estate, right? Because real estate tends to be, you know, brick and mortar and sticks and sticky and all of that stuff, right? Roof over the head. So it's a different commodity versus stocks, right? Where you can, you know, buy and sell a click of a button and stuff like that, right? So when the liquidity starts, when it tries to start, then like in 2026 we might see thousands upon thousands of these listings and units and all types and kinds, and I think it's not gonna be even like imaginable what kind of listings and types of property we will see hit the market. Like, you know, like everything is gonna come at once. The people that tried selling were not successful, they will show up again in 2026, I promise you. And then the people that say, oh my gosh, I really can't afford it, even if I refinance, I can't, right? So they will hit the market. And then, you know, the people, they'll say, hey, look, if these two are going, I better go, even though I don't maybe have to, but I want to. And then the people that want to retire, or they're retiring and they just want to exit altogether, boom. And then you'll have the people that are like, okay, so I don't want to be here anymore, I want to go to a warmer climate or something like that. So they're gonna show up. So, oh my gosh, and then like these people that are, you know, renovated, were not successful, didn't sell it, losing money by the day, boom, they'll show up. Over leveraged, they'll show up. So everybody will show up. I think there's a potential that everybody puts their house for sale. And even though some realtors are claiming that the market is picking up, yes, the calls are picking up, your CRM leads are definitely picking up, but nobody's signing anything on the dotted line, right? And then some of these posts, like, you know, like some, I don't know, some condos or homes were, let's say condos were listed for $600,000, now they're listed for $350,000. It's like, oh my gosh, like this is the best deal. Well, when they were $600,000, you guys were claiming the same thing, it was the best deal, right? Same thing for homes, 1.5, oh, the best deal. Now they're 1.2, it's the best deal. So when they hit to $999, it's gonna be the best deal. So it seems like, and it is the best deal at the time, I guess, right? But how do we kind of see forward? Like, I think this is our mission. Can we all collectively analyze the future truthfully and say, hey, look, this might be the outcome, and what could we actually do for real, right? Starting small steps, maybe getting rid of some subscriptions that you don't need. Like, you don't need 15 TV providers, right? Disney Channel, Amazon, Netflix, this, that. Like, stick maybe to one or none, right? Or like, there's so many examples. Maybe you can shave, you know, $500 or $1,000 a month here and there, right? What you may be spending and stuff like that, and try to find that particular solution, right? I don't know. So those with liquidity will dictate the next cycle. Yes, absolutely, right? Like people with liquidity, people that are waiting, they will have definitely no mercy. It doesn't mean that they're bad people. It doesn't mean that they're how am I gonna say, sharks or anything like that. It's just like they have seen the entire picture ahead of time, and they're just taking their time. So yes, you will see a lot of the low blow offers. You might think as a seller it's a low blow offer, but even that might be the only offer. So what do you say to that, right? So let me get into some real stories. So 40-year-old investor in Mississauga owns 3 condos, all bought pre-construction. Refinanced his home in 2021 to fund deposits. It was happening all over the place. Now facing negative cash flow of $1,800 a month. tried to list one unit, no offers for 60 days, which is very common. Like I've seen units sit for a year, right? Like on MLS, right? Still believes once rate drop, it'll all turn around, but the numbers say otherwise. Yeah, that's the common thing. Like, you know what, like after this quarter drop, it will just awaken everyone, and that illusion that everyone will just line up once again, and those prices will be jacked enormously overnight, exponential growth over the weekend. Not gonna happen. Like, that's it. That's very simple. One sentence: it will not happen. That's it. All right, story number 2. Dual income couple in Hamilton, both stable jobs, bought at 1.2 million with a variable mortgage in 2022. Payments nearly $1,000 a month. Since then, they went up. Payments went up. So credit cards now covering daycare and groceries. They want to sell but can't because they're losing $150,000 after fees. So this is a common phenomena. We're seeing it all over the map, right? Like, people are tapping into the Visa. People still have needs, whether you like it or not, right? Like people have to feed their kids, right? Like, and they'll tap into Visa. They'll go into line of credits. They'll go into certain types of debts, and then hope somehow that they can, I don't know, by a miracle, that they can swim out of that highly waters, which is probably unlikely, right? And then if you're stuck in that particular property and you cannot sell because selling selling basically means equal to walking out with zero equity or no down payment whatsoever, right? All right, so story number 3. A small developer in Ontario built 8 custom homes financed on leverage, expected to sell it at $1.4 million per unit. Buyers vanished after the rate hikes. Carrying costs now exceed $50,000 a month. 2 units listed at $999, still unsold. He's considering selling land just to survive the next quarter, right? So I don't know, I mean, like, it's just what it is. Like, you know, people say, hey, look, it's a bad day at work, right? But when it comes to this, like, I think it's a bad day for, you know, a decade or two, right? Like, for some of these people. So that's why I believe that we are definitely now getting into a area of no comeback. Like, I don't think that we can fix or have a magic pill to fix all of this, because if that was the case, it would have been fixed already. If low rates were the magic pill, well, we lowered rates. If immigration was the magic pill, well, we had a record number, right? If so many things were what we tried, if they were to fix, it would have been fixed already, right? But it seems like none of these segments, ideas worked, right? So I don't know what we will do as a whole, and how Canada will act in the future when it comes to, you know, manufacturing and creating jobs and building something more stable, right? Or everything will just collapse like dominoes. So I hope you gained something out of this video. Please like, share, and subscribe, and I'll see you in the next one.